Ah, okay. Now it looks like it's recording. Do you all see my screen or Augustine's screen? I'm a
Joe,
little confused. Yeah.
Joe. You see on the tabs on the top right, it says screen sharing.
Yeah, I have that.
Okay, make sure you click on, let's see, I'm gonna make myself the presenter again.
You know what? Okay. I think it is
Um,
recording. It says recording now, but it won't show but I wasn't sure if my screen was showing or not.
yeah, GoToMeeting is acting up, Joe, today.
Yeah,
It's acting up.
why don't you hit cancel that request you just made? And I'm gonna do something here and ask our members if they see it or not.
Can you take control, Joe? Now it's not even letting me take control. I've never seen GoToMeeting do this before. Never.
Nope, it's not letting me do that. Yikes. Change percenter. Let me I'm gonna make you percenter again.
Okay, go ahead and do that.
And now you can come back and make me percenter and see if it'll do it. Jim is reminding us that what is it, Jim? Mercury Retro is here. Computers get funky. You want to make me presenter again?
I'm trying, Joe. It looks like you are the presenter.
No, it won't
It
show my
looks like you
screen.
are. There you go. And now I got the show my screen button for the first time. Now I'll make you the presenter again.
All right, everybody see my screen?
There
Now
you go.
I'm moving my screen down and showing the charts. Y'all see that? Let me know so I'll know whether my okay. All right, great.
We're look. We can see the intro, Joe. The risk disclosure.
Okay, great.
I think it's fixed.
It's fixed. Thank you. Thank you. Thank you. Thank you. All right, let's get started. I'm going to take last week's and we're going to bring it forward. What was last week? Was it the 11th? Yep. So we're going to come in here and we're going to change it to the 18th, then save it as PJ taught me. All right, week's theme. Week's theme. Let's take this. Well, let's see how we did last week. We talked about Greece might have a flare up in Greece. That didn't really happen. Intermarket relationship. Look for direction. That worked out real well. Bond liquidity problem. There were also other problems, which I'm going to share with you. High yield bonds. That continues to be a scare. U.S. oil production. Well, we had that number. So we're going to take this. We're going to cut it. And we're going to paste it to last week. So we can keep track of it. So what's it going to be this week? Well, let's throw some stuff up. I think the US dollar is going to be in the limelight. I think bonds are going to be in the limelight. What else? Well, let's look at the week ahead. That's our starting point. Okay. This is what we've got. Bond market stole center stage. We had the German Bund yield, a spike. In our market, the treasuries recovered by the end of the week. So, we definitely saw a rise in volatility in the bond market. We've been seeing it. Global bonds. There's still talk of a liquidity problem. But here's one that I hadn't thought about. Risk management strategies employed by large managers. What does that mean? Well, by the way, there was a spike right now. Interesting, in Euro came right back down. So that's still consolidating for those that left the trade room with a position on. Let's see. All right, so here's a take on it. There is a risk management strategy called value at risk. VAR. VAR. Okay? And basically, what strategist or the approach of VAR is that when there is very little volatility, which usually happens when markets consolidate or when markets go up slowly and there's very little volatility, VAR will have the VAR risk management. What they do is they start leveraging up to be able to take a little bit more money out of the bond market. So that had taken place, and then all of a sudden, you have a little breakout or a little breakdown, and they rush to cover their exposure, and then that feeds into a selling, into like a domino effect. And when that occurs in a poor liquidity market, then the volatility is magnified. Okay, so that's something that I really hadn't thought about before, but I did my research over the weekend, and I was able to pick up on that. They also said, I also read, and this we knew, we had been talking about this last week and the week before, that technicals, we were going to concentrate on the technicals. The move has been blamed anyways by some of the pundits as a technical move, not a fundamental move. If we go back and if we go back and apply the fundamental to the way bonds have reacted, for the markets have reacted for the last 2 weeks, it's a perfect fit. Correlations have been off. Correlations have been totally off of what's been the norm. So another chatter among the trading desks, trading departments, institutional trading departments, is this move in bonds has been mysterious. And usually we really don't know why these moves occurred until they've occurred. And then there's, an explanation comes up and they're able to pinpoint it. But right now it's still slightly, it's mostly a mystery. So we need to pay attention to correlations and see if the correlations do come back to a more norm. Then we're going to use that for our trading as part of our market selection. But these last couple weeks, our market selections have been basically just on technical reasons. Yeah, Jim, we've been talking about that liquidity issue. It's a catch-22. The central banks have been the buyers of bonds, right? In Europe, they have a restriction that if the bond yield gets to a certain level, and it had already been negative, and it was fast approaching that level where they can't buy it, right? They have rules. Um, so I don't know if this was manipulated or if it's just the markets, you know, doing it on their own. But the spike up in bond yields, especially in the German Bund, which had been negative, that's the one that had been negative and they were keeping a close eye on. Now it's back in a level, a safer level, where the central banks can buy it. So that's a little something else that I read about it. Yeah, Jim, I think to a certain degree it is. It is manipulated, no doubt. I personally don't have proof, nor do I need proof. You just got to take the price action. I have found myself to always get in trouble whenever I stray away from price patterns and the technicals and depend too much on fundamentals. Fundamentals are great and we teach them and I believe in them, but they're lousy for timing purposes. The technicals gives you is my starting point. The fundamental backdrop is more to support my how the markets work and the reasoning behind some of these moves. The other purpose of the fundamentals or the fundamental part of the markets and trading is it helps us at times catch these reversals in the market or shift from one stage of the business cycle to the next, like we covered last week. So for this week and developing our theme, I think the dollar is key. It's going to be key. Let's read a little bit more. In the commodity market, silver gained, wheat gained, natural gas, gold. So with a lower or with a falling dollar, yeah, the commodities we're supposed to outperform. So now we got to keep an eye and see, well, if the dollar gains some strength like we saw this morning, does that mean that they're going to unwind those commodity trades or commodity positions? So let's go back up here and start filling in. Question mark? Don't know. Dollar and bonds relationship, to be more exact. What else? PJ says, what's the difference between fundamental and technicals? Fundamental, when it comes to something like stock market, is referred to earnings, things like that, P&Ls, sales, just a whole bunch of numbers. When it comes to the general market, the fundamentals is the macros, intermarket relationships, the business cycle. All those things are fundamental. An example here would be we've had a difference of policy between the United States and Europe. So on a fundamental viewpoint, the dollar should be strengthening and the euro should be weakening to reflect that fundamental difference. The technicals is what you see on charts, patterns, price. Price patterns is really nothing more than market participants' behavior and their view. You've got the herd, and then you've got the institutions. Those are, big players, right? The herd as individuals is not large, but when you group them together, they can, they are very well represented. The institutions trade they're few, but they trade large. And sometimes they act together, and a lot of times they act opposite. That's from a fundamental viewpoint, their behavior tends to be different. One of them, being the herd, is pretty much here's an example. It's pretty much like they seem to be herded. The options that they're given sometimes are few, so they have very little choice, and they tend to be herded, round up into a specific asset class, as an example, like what we have seen in the stock market for the last few years. Interest rates are so cheap, you get some retirees, and you get others, you get the general public, where they say, market was up 20% last year. Bonds are paying half of 1%. My bank CD's paying a quarter of 1%. So they tend to put their money up in the stock market, and they're taking greater risk. They're being herded, whether purposely or not. That's another subject. Technically, we can spot crowded trades. We can spot the unwinding of these trades. Those are the technicals. See the difference between the fundamental and the technical? So the key here for us, for what we're doing today, trying to set up the theme for the week, we got to pay attention to the dollar and the bond market and their relationship. And let's see if we can spot some commodities unwinding. So we're going to look today at the key levels, not just in the S&P, not just in the benchmarks, but some of the key commodity markets. What other theme is developing or could develop for the week? Let's see what I wrote about. US dollar fall, pushing the euro 2.15% higher. That was a big move. British pound, the fundamental case for a strong dollar was viewed on the difference in monetary policy, but technically it remains vulnerable to further downside. The dollar had gained 27.5, and this 7.5% pullback's not all that big in the scope of things. So there is expectations of it, continuing to climb higher. This is just a retracement. I don't know. It could fall more. We're going to trade the technicals. We're going to depend on the technicals. We're going to use correlations to help us determine that. How were the correlations today since we were short the euro? I don't have that trade in on this computer, but here's crude. Here are the notes. Here's the dollar. Let me put these up on 30-minute charts. You can see the notes went down, yield going up, and the dollar going up. That's more of the norm. So let's put here, big question mark. Okay. By the way, the S&P is finally breaking out for those that might be interested in a trade in the late morning session. I'll put it up for you here. Which is the leader? Hold on. I got my charts all messed up here. Looks like NASDAQ's leading the way higher. There it is. Almost at the target already. So the buy here would have been back at 11:15. So we are 15 minutes late on this trade. The trade was here, right here. I wasn't looking at it. Let's take a look at the benchmark. There it is. And benchmark just hit the target. So Augustine, you were a little too early on that trade, and my friend, that happened to me last week. Here was the Dow Jones. Here is the Dow Jones. Where is it? Maybe I got the wrong symbol. Yeah. There it is. It's lagging now. It's the laggard out of the three indices. But you might see the S&P. I can find it again. This is so aggravating sometimes. Using two different platforms, you might see it consolidated in here and then print a new signal in zone 2. So you still might get that. It sure looks strong. Anybody catch it? The Dow's on the hot list. All right, back to our lesson. Sharif, way to go. All right, so correlations. Well, gold, S&P, 10-year notes. Are they back in sync? So let's look at gold. We're going to go with a 30-minute chart. Doesn't look like it. And no. Look at how look at the notes coming down. Gold is going sideways. So these three that usually coincide are not back in sync yet. So we're going to leave that there. Gold is hanging on. Euro and 10-year notes did. The correlation's back. Commodity currencies, let's see. We're going to look at the Canadian. We're going to look at the Aussie. The Canadian broke down first. Aussie has not had follow through. Excuse me. We'll take a look at the New Zealand. If I have it here, I may not have it here. Is this the New Zealand? Yeah. Yeah. So the Canadian, New Zealand look alike. Aussie not really participating, but you see this move up and this move up on Friday. It's pretty much the same. So I'm going to go ahead and include them like yes, they are. They have been. So the commodity currencies are with each other. The commodities in general, not yet. Now the dollar versus crude and the Canadian. Well, we just looked at the Canadian, and crude looks like the Aussie. Looks pretty much like this. We looked at gold. So these are close. So we have to keep an eye on this. What's the word I'm looking for? It's still up in the air. Crude did not come down as hard. So we'll see. 10-year notes, dollar, and FX. Yes, but opposite. Now it's mixed. So rotation flows. Are they back in sync? Not yet. We're going to be looking for unwinding of recent trades. Yes, which is going to be, if this, then that. Risk off, we're going to look for bearish. And what do we have today? We have risk off. Before I sign out today, I'm going to open the trade station and show you where I keep. Or maybe I'll have Augustine. I think he's got its charts with both data streams. But yeah, this started late last week, and we're looking for, if there's risk off, bond and notes, bearish, dollar strengths. Gold did not weaken today. The S&P did strengthen. Okay. This is the other way around. My apologies. Nobody picked up on that. You guys sleeping? Risk off, which is what we had today. I'm sorry, risk on, which is what we had today. Risk off would be the opposite, so we would look for notes bullish, euro strengthens, gold strengthens, S&P weakens. This has been the only wild card. So we're going to keep an eye on gold. So gold is one of our wild cards here. Okay? Nice follow through, guys, for the S&P. Very nice follow through. So let me show you the S&P. And here's the notes. And you can see how they're going opposite. I'm going to have to put a little bit more days in here. At least 5, right? So you can see the divergence. They're going opposite. That's in sync. I don't know about you guys, but I welcome it. Trading is a lot more fun when the markets are all in sync. So now I'm going to put over here, I'm going to put gold, and you'll see the difference. Well, the dollar first. You can see the dollar going with the S&P. That's a good thing. Now I'm going to put gold here, and we're going to analyze gold. And that might be the one that plays catch up. See how it's hanging in here? So I would say a key level is going to be where this RQ7 and RQ2 looks like they're going to match up. And it looks somewhere around 1210, 1210 and a half. And then I'm going to tell you why. 1210 and a half. Now I'll go back and explain it. It may pick up steam. All right, let's go to work. First thing we're going to do is we're going to try to create some trend lines. Let's get rid of this box. Try to get rid of this. Let me see, it's right there. Anybody know how to delete this? Where is the drawing tools? Here we go. There we go. All right. Now we're going to come in here and we're going to draw. We're going to try to identify the lows on this move up. This here area is a key level. So this is going to be your first support. Looks like 12.15 and 12.15. We'll round it off. So that's going to be our first support. We're going to do it the other way around. We're going to do support first. Support 1. What did I say it was? 12.15. Then I'm going to put here in parentheses for educational purposes. That was prior resistance. Okay? Everybody clear with that? See this? Resistance. Boom, boom, boom. Ran up. Broke it. Came back and then continued. Came back. And let's try to continue. And it's staying with this trend line. So this is, so if it does break from this trend line, this will be first support, 12.15. Second support is going to be that break point I gave you, 12.10.5. And it can go very quickly. If it breaks that, it could go very quickly to 11.97. So that's going to be on the spotlight. So we'll put here okay. So second support would be 11.97. That's going to be our preference and not longs. Okay, we can always find some long opportunities. Let's come back here. Let's take a look at the euro and the dollar. But the dollar we're already going to do because it's a benchmark. Here is the euro. Boy, that euro came close to some big old bucks. You can see here the similarity with gold. So just like we caught gold this morning, we're going to be on the lookout and catch gold should gold break and try to catch up with the move that we've seen in the euro and the 10-year notes. So we'll go with the euro. It already started. And we've got support 1 Here would be a trend line break. And it looks like 1328. This would be the breakout, which would be the next support, and it looks like 1285. Okay, everybody see that? This is next target. Next target could be all the way down here. So we've got some potentially interesting set.
Joe, we lost you. We lost you, Joe. We lost you, Joe. Hello. Joe, you're back.
I'm back. Did I lose the sound or just
It's the sound.
okay?
The sound. It looks like possibly the cable on your microphone might be
No,
breaking up.
no. I think that's more of what we had this morning on your side, and then on my side, I don't. My
Okay.
cables are nice and tight.
All right.
They're so tight that they look like they're glued on. That's how tight they are.
No, but the sound is like that though. Like if the jack is a little broken, that's how it sounds like because it's like it sounds like you're plugging the cable in and out. That's the noise.
Kind of thing. All right, where I left off is putting a resistance level. This could break. Uh, my wish would be for this to break down because I prefer shorts. You know, I made $300, $320, I think $300, 320, 340 in that trade today. And Augustine got me all excited when he said 1300. So I'm wishing, and I'm going to be on the lookout for another opportunity in euro, and then maybe I can pick up a monster $1,300 move with one contract. That would be sweet, right? That would be real sweet. So that's what we're doing, and this is what we do on Mondays, and this is the newer format for those that are new and don't really know what the old format is. The old format is we looked at all the markets and we put up support, resistance, key levels, this and that. Now we're doing, and we always did the theme. The theme we always did. We're continuing to do the theme, but we're looking deeper into the technicals of the benchmarks, and we're highlighting one or two markets that match the potential theme. All right, let's see. What other markets do we need to look at? What other markets? We got the euro. We got gold. We got the euro. Let's take a look at one of my favorite markets. And that is crude oil. Because if the dollar does strengthen back up, there might be pressure on crude, right? Let's take a look. So far, I'm seeing a lot of consolidation near the top. You've got moves here, and let's review them real quick. Here's the first move. Looks pretty close. How do you make it thicker, Augustine? Properties? No.
Joe, simply double click on it. Double click on whatever you want to make thicker.
Ah. Okay. So you can see the boom, boom. You know, every time that it bounces from here, it takes out the previous. This is so technical. PJ, this is technical. What I'm going to show you now is pure technical. Good looking chart. You can see it came down. Oh, let me get the right color. You can see it came down, bounced off of here, bounced off of there, bounce, broke. You draw your trend line where the break is. Quickly went right back up, took out here, it took out here. Here it took this out. These are key areas, guys. You can see the slope right here continues with these minor stalls right here, and it keeps taking out previous highs. But then here it broke. We draw a trend line, and it broke out and tried to get back in, but failed. So this now we start looking at a potential new trend. Okay? So this is very interesting. And in my opinion, if the dollar moves up, could put some pressure. There is a way to trade this, and I'm going to technically, and I'm going to show you. But the dollar could help. What's going to help the dollar? If the notes go down. All right, let's get out of here. Erase everything over here. We're just going to get out of this altogether. I can't see this very good, so I'm going to pull this out. And now I'm going to work my way. Not sure if I should start it from there. Yeah, looks pretty good. I'm going to put this as a 2. Is there a way on Ninja to duplicate this to have a parallel? Augustine, do you know? How can I duplicate this line?
Joe, you can always do select it. Go ahead and select it. Select the line that you like to. Yeah. Now Control C, copy, and now Control V, paste. Do Control C first, then Control V. Control C, now do Control V.
I don't see it.
It may be on top
yeah,
of it.
Yeah.
Yeah, make sure you use the little square in the middle of the trend line. It will allow you to move it without changing the slope.
How can I make it longer?
You need to extend it, but that may change the slope. You need to select, select the line first. Select the line first. Now drag the little, that one. No, you're dragging the archy channel. Watch it. Yep. No, you're dragging the archy channel. Wait for the cursor to select it, and now stay there and wait for the cursor to. Don't click on it yet. That one. It has to wait for the cursor to change into those 2 arrows on the little box.
Now?
Yes. Make sure the cursor looks like those arrows pointing diagonal from left to right. Yeah, you're dragging the background. You're going too fast, Joe. You're a little slower. Right there. As soon as the cursor changes into those 2 arrows, then you're going to be able to extend it.
No, it's not working. Anyway, I'll do this. Won't do it. Anyway, this looks like potentially, it's actually a little higher. A new little channel that we might have in the making here. And I don't know if it's going to hold or not. But right now, it's like in a dangerous place to trade, if you ask me. This was easy because I can see the. Let me make a copy of it. This right here was obvious, but I don't. This is not. You got a a long wick here. That's a bullish hammer, and it did revert back, and I think it's right here right now, right? Not sure where it's at, but this could go either way. What I would want is for a new RQ channel to form right here, but it hasn't done it yet, and then trade the break into this channel. That would be one scenario. This thing could also just head way back up, and then you either trade the breakout or you trade the way back down. It's too early. Way too early. Anybody have any opinions on crude oil for the week ahead? So this would not be my first choice just yet. So what can we say? What can we say? Do you guys want to even put crude on here or not? You've got Euro might be making its move. Euro's weakening, guys, as we speak. August, are you still short? Yeah, look at the dollar.
Joe, I got stopped out. My trail stop got hit. The lazy river got hit, but I'm gonna take a stab at this. It looks like free money. It looks like free money. If for a nice momentum break. It looks like it could have a little, a nice push.
There you go. You what, the lower low? The only thing I don't like is
Yeah,
the
let's do the
time.
lower low, Joe. Let's do the lower low, and I'm not planning on staying on the trade that much long.
What's the low? 44 and I'm at 39. That's okay.
Yeah, by now I wanted to still be in the trade. This is the
Yeah.
first trade. 10 ticks down the road, it may have a little bounce, but the dollar look at the dollar, go left in the dollar. There's a break down retest that it could go for.
The
But
dollar's right here.
yeah, and go left on the chart and see where it broke down from.
Further back.
Keep going left. Yeah, go further back.
Ah, very good eyes, Augustine.
Yes, going for that one. I mean, I know I'm late to the party. I know I'm late to the party. I mean, doing this strategy, it may not be. Again, by now I want it to be up a few bucks, not starting the trade from the beginning. But yeah, I'm looking for that breakdown level. It could work as a magnet.
That looks like it could be another 300 bucks. About.
Yeah,
All right. So, what else do you guys see for the week ahead? I think we're going to need a nice box for here. We might have to wait for this to consolidate. Here, in fact, we do have a box already. And that box looks like it's all the way from back here. Maybe bring this down a little bit. That's crude oil. So crude looks like it's a little lower than that 50% mark. So we've got a new consolidation box. And that box is going to be, it looks like 62.79 and support 59.08. So we'll see. What do you want to put on here? Wait? What do you want to put? Pending? For now. All right, now let's go ahead and jump into the benchmarks. Does anybody have any questions before I continue? Let's go ahead and look at the S&P first. I think that's what we have on the list, right? Look at this, guys. We drew this, and look at this little break, and we had this opportunity. So it's no different. Look how it went a little past the midpoint and jumped right back up. So what I see here is this. This has not changed much. Might be in this trade sooner than we thought, Augustine. The only thing is that it's past tea time. We can't include it in the performance.
Doesn't matter, Joe. Doesn't matter if we can include it. It's the habit that we're building, right?
Yeah. I know. Yeah, but I was thinking of the managed accounts, and this is the week that I'm trying to match all the trades in the managed accounts with the trade room. Now, there you go. We're short. And there it goes. It's going to be a nice trade. I hate I didn't do it. Let's move on. We'll keep that on the side. I didn't do it in real account. All right. So here we've got. Let me adjust this. Yeah. Here we've got the S&P. So this is an ascending triangle, and this could go either direction. I treat ascending, descending as symmetric triangles. So, well, actually, 10-year notes was the first one on top, but we'll do here. Big box, look at midpoint. I think we have an ascending triangle. We've got resistance at top of edge, volatility to downside. We've got 21.19. That thing's all the way at 21.23. That high is what, 21.24? Did it make it to 21.25? I'm going to put 21.25 even. I've got 128. It's not that far from there. Support. Well, I would say that a key level to look at is going to be 21.11. But I won't do that. Here I'm going to put, what did we do here? Trend line break. I already have volatility to the downside, so let me take this off. What else can we put on here? The midpoint should be about 2090. That sure is far from there. I would say it's right about right there. So what I say the midpoint was? 2092. And first support, I got 2057. I would say 2092. And second would be 2079 and a quarter. All right, that takes care of the S&P. Let's move on to the big elephant. The notes. Ain't this pretty? So what do we got here? I see something I like. And that's sweet. So it's at a major, it stopped at this. We drew this line last week, guys. This midpoint looks like 127.16. Look how it respected that line perfectly. So this is good. So this broke out here. Nice little double top. So this will be interesting. I'd like to play this to the downside. It could, of course, revert right back and head up to the highs. But this midpoint, yeah, 127.14 is still respectable. Range box, lower highs. It's not the case anymore. Now it might be a double top. Super. I like it. I like it. I like it because now you've got the correlations are coming back. This is not so mixed. This is pretty much they're coming back. Let's see if they do. Today's the first day. So if this breaks, we're going to have opportunities in the euro. We'll see if gold catches up. But here's the key. It's at a critical level. So let's write in these numbers. So we've got resistance at where's that, 128.20? 128.06.5. Support is going to be 126. $27. And midpoint is very good right there, 127.14. Man, that was good stuff, huh, guys? That's very good stuff. All right. I think that we're pretty much done as far as what we're going to be looking for. So let's do, before I do a quick review, let's let's open it up for some Q&A. Augustine Benton is asking for a stop loss. I don't know where you want to put it.
Joe, I have a very tight stop. My idea was fill, go or die, pretty much.
So where's your stop? Right here?
There's a lot of support down here, so I'm not. My stop loss has been at 53, but there's no way I'm gonna go with that big of a deal. I'm only risking $125 because it's a go or close. I'm too late to the party. If I'm late to the party, I gotta admit it, and I gotta just play it safe. I admit that I'm late.
All right, we'll leave it right there. All right, what else? Questions? So, are we clear on what we're going to look for? Let's do a review. Which market is leading of the ones that we looked at? We looked at gold, at the S&P, 10-year notes. Here, I'll put it back up here. Of these markets, including crude oil, euro, gold, dollar, S&P, 10-year notes. What are we looking for? Which market is leading and which market is lagging? Ron, just these markets here, not any other market, just these. And I don't mean necessarily on a 5-minute chart. I mean in the 240-minute chart price action that we just looked at. Well, which one's this? The dollar? We need to finish the dollar. I'm sorry. We didn't do the dollar. We need to do the dollar. This is the notes. And on the notes, we've got a big box. We've got a big range. Big range box. But it's a double top. Is there a trend line break? It's testing. Right now, the trend line break. The euro trend line break, same thing. Gold is not. It's not close to that level yet. Did it get you out, Augustine? No, not yet. Excuse me. So let's take a look at the dollar now. This is a breakdown retest. Let's see if we can make sense of this move. So here was the, let me extend this out. So this thing trended down, broke out of the downward trend, and went right back in it, and it's testing. So we've got some new trends here, new trend lines that we need to update. You've always heard the trend is your friend. I don't necessarily believe that, but I do believe that drawing your trend line is your friend. Ron says that he's going with the notes as the leader. Um, so you can see the dollar is not out of the woods. Not out of the woods. How'd you say? This is a click on it. Control copy. Control V. Yeah. So here you have it. Here you've got the break. Let me show you what I mean by that. So you can see it broke out of the downward trend, consolidated, broke down, bounced here. We draw our trend line, and here is where it broke out of. About right there. So I'm going to draw a new line. Excuse me. That is going to be key right there. So if the dollar can break out of here, it's going to have resistance sometime soon. And I have no idea. I don't have any idea if this thing is going to revert back to this level and then back to the downward trend, or if it's going to reverse. I don't know. I really don't know. But if the correlations continue to be tight, or I'm sorry, if correlations continue to go back to the norm, then we'll trade it accordingly. But you can see this little breakdown area from here, this key level, is where it's at. The next level would be here. This is the level I think Augustine picked up, and that's very, very close to maybe tomorrow's resistance on the downward channel. So we're going to put on our little notes, dollar is still in a downward trend. Don't know if it's going to break out or continue. We've got a new small box, and we got small boxes. I've got the midpoint at 94.76, but now that's going to be different because we're working with this trend line, so that's about 93.60. I'm going to go with this level here, 93.53 it looks like. Yeah, 93.53. Resistance is going to be about 94.35. I think it's 94.345, remember correctly? 94. 315. Support 93.17. All right, let's take a look and see if this apply, if this, then that. So to the long side, if it can break this RQ channel, it might run up to the trend line at around 94, what we say, 94, 315 or 3.25. However, see these highs going, these lows going higher? If it breaks, this thing could come right back down. So this is a 50-50 where this is going to go. So any questions? Let's do a quick summary. Leading indicator. I think I would lean towards the 10-year notes as my leading indicator. It is right at the break. The one that's leading, though, however, the one that's leading, even though I'm going to use the 10-year notes, the one that led today, the one that already broke. So the unwinding began a little bit today in the euro. So we're going to keep our eye on the euro. We're going to continue to trade the euro using the 10-year notes. We're also going to look at the next one that begins unwinding to be gold. Crude, we're going to keep an eye on, and we'll see what happens. It's consolidating, so there's no need to rush into a trade in crude yet. That can change tomorrow. And that's about all that I've got, folks. Can you think of any other theme? The technicals. Continue on the technicals. It's helped us.
Joe, what about FOMC and all the speeches that we have?
Yeah, thank you very much. Thank you very much. Thank you very much. We've got FOMC. We have a lot of data, I think. FOMC and data.
Yes, Joe. Last night when I was doing the week ahead, Joe, I noticed that on Friday at 9:30 a.m. on Friday, there's like Draghi speaking, then Kuroda's going to speak.
Yeah,
then,
there's a lot.
Stevens, then Kolos. There's a lot of central bankers speaking. Monetary policy from Japan.
Yes.
In the new highs. So.
Yep, there is. There is. It's going to be an exciting week. Exciting week. All right, folks. What else? Augustine, anything else to add before we close up? I like the new format that we're doing, by the way, because these are the drivers, are these benchmarks and 2 or 3 key markets. These are the drivers. You know, to look at every single market, we kind of get lost, and our attention begins to run away from us because it's a lot to cover. At least here we're getting a better grip of the 3 main benchmarks, and if we can put on the spotlight 2 or 3 markets that might be ripe for a move, then I think it's a better approach. Besides, you go through all the markets every morning anyways. So, any feedback? Any questions? Well, if there's no questions, we're going to go ahead and close up if there's no questions. Jim says you may see the indices rally from between 1250 and 115. Could be, or it could be the last hour into the close. It's very possible. All right, everyone. I'm going to go ahead and Daryl reminds us Iraq. Yep, but the Daryl, the oil market didn't really react, so I don't know. All right, everyone. I'm going to go ahead and sign out. If there are any left questions unanswered, shoot an email to support@riosquant.com and we'll reply. All right, everyone, have a safe rest of the day, and we'll see everybody back here at 7:30 tomorrow morning. Bye now.